I first stumbled on Constellation software in 2014, and it was just a simple screen, CT. I was just screening for high ROE companies, high return on equity companies. I think at the time it was 20% or higher. Came across Constellation software and thought, okay, this is a high return on equity. Went to Morningstar, looked at the 10-year track record, and saw the maintenance of a high ROE, and every per share metric was just amazing. Right, revenue per share, earnings per share, book value per share, just growing at a nice pace every year, year over year. And I think what really won me over, CT, this might sound strange, but the last of my due diligence, I went to the Constellation software website. And as soon as I loaded that website, I thought, wow, this looks like it was designed by a high school a student, like in grade 9 or 10. I thought, okay, this is it. This is the company. They're totally focused on the business. They don't care about the website, much like Warren Buffett's Berkshire Hathaway website. If you go there now, still, it looks like it was coded like in 94, 95. Tell us about Constellation Software. What did they do?
Well, so they are basically a perpetual owner of VMS businesses, so vertical market software.
And VMS stands for
Yeah,
Vertical Market Software. Got it.
yeah. So that's basically the opposite of what you have with Microsoft, so Excel and other very, I would say, broadly implemented software, basic software. So for example, you can have vertical market software for library software, secondary school software, so very specific, very tiny total addressable markets where you don't have a lot of players because it's very tiny. And so Constellation, they own 1,000 plus of these very specific businesses, companies that are generating a lot of cash, but because they're operating in a very, I would say, total addressable market constrained sector, that they don't have a lot of growth, but just Constellation, they take the cash, they reinvest it, acquiring more businesses, and that's a bit the story for Constellation. So buying very cash minting businesses, reinvesting their cash flows back into other businesses, growing, diversifying, also adding over time some businesses with higher organic growth, some turnaround stories as well with bigger revenues, but also some maybe internal problems. But that's been the story for Constellation. So reinvesting cash back into VMS businesses at good returns, improving these businesses post-acquisition, improving the culture, best practices, as they call it, and improving organic growth, profitability, everything. So post-acquisition performance is very important, and it's one of the factors that I've come to appreciate over time as well. If you want to be a very successful serial acquirer, then you have to be very good at executing that post-closing, post-acquisition playbook, making sure that you can still improve that business, because in the end it's all about cash flows. And again, that's one of the main reasons why Constellation is so attractive, because as I mentioned, they have 71% recurring revenues, versus if you have an industrial serial acquirer, it's a lot more cyclical. If you have recession, you have to maybe lay off some employees, maybe some of your best employees as well, just to make sure that you can survive crises, etc. And with Constellation, you do have, I would say, a very strong moat with 71% of recurring revenues.
It's a more predictable business. Now, tell me about how they run the company, though, because it's based on a decentralization model, right? It's completely decentralized. Tell us more about that.
Yeah, so basically, initially, if you take a look at, for example, the Constellation IPO prospectus, then you can also see that initially Mark Leonard was making the investment decisions. But then, of course, as you grow in size, you have to delegate these tasks to other people as well, to keep reinvesting your cash flows. So increasing the professional M&A staffing as well. Then they've started using the system, or I would say the strategy of operating groups. So where you have companies that own, for example, VMS businesses in finance, others maybe in transportation. So basically building groups of umbrellas where you have all of these subsidiaries, smaller businesses, individual business units under the CSI umbrella with, today roughly, 6 operating groups. And then basically each operating group, if they have an M&A opportunity, they can, talk to the board of Constellation, at least initially, and then basically ask for approval to do the acquisition. But then again, over time, as Constellation has grown in size, you've seen increased decentralization to make these investment decisions, at an operating group level. And then over time, when you have, let's say, clusters of 5, 10 business units, that you can even, delegate these tasks to smaller business units as well, if they see an opportunity and if they want to, acquire businesses that fit well into the CSI, framework strategy. Yeah.
And then can you walk us through CT, the organic growth versus M&A?
Yeah, so basically it's interesting that people today, when you talk about software companies and when you take a look, for example, at Roper Technologies, which is the US, I wouldn't say that it's a copycat of Constellation, but they have a different playbook. They are a dividend aristocrat, so they pay a dividend, but they go after acquisitions with higher organic growth. So roughly, 7, 8%. And when you look at Constellation today, it's 3%. Recently, there has been a significant tailwind because of inflation. So just pricing through inflationary costs. But if you just take inflation out, then it's reasonable to say that Constellation on a real basis isn't growing much, maybe 0.5% roughly. But of course, you do have maintenance revenues for Constellation growing at 6, 7% roughly, also taking into account the inflationary component. And over time, assuming that Constellation doesn't do any additional acquisitions, then of course organic growth will migrate towards the growth in maintenance revenues, so 6% roughly. So that's still, I would say, pretty decent. But overall, as I mentioned, with the VMS businesses, these are very tiny businesses. You don't have a lot of organic growth opportunities. You do have a small industry to operate in. Oftentimes, the businesses that are acquired by Constellation are having a number 1, number 2 market share in that industry. So basically, what is the main reason for the existence of Constellation is indeed acquiring many of these businesses, improving their performance post-acquisition, but definitely not the 10, 15+% organic growth that you're seeing at other businesses in software. And especially because, Constellation, what they did initially was examining the performance of organic growth. So if you want to launch a new product, if you want to try to capture more clients, improving your offerings, they discovered that because of the long response time when you're making these investments in R&D, in sales and marketing, that the returns were quite unpredictable, and especially that the aggregate returns were quite small. You had companies with favorable returns on organic growth, but then you also had companies with very poor returns, so well below the cost of capital. And so that was very unpredictable for Mark Leonard, which he refers to as the internal rate of return dispersion. So if you have a wide range of outcomes, then it's not very predictable. If the most likely outcome is quite poor, and that's the reason why Constellation focused on acquisitions. So it's because the returns on organic growth are unpredictable and not attractive, and also because of the fact that you're dealing with very concentrated vertical market software businesses. So that's the reason why they decided to become a very acquisition-oriented company. Yeah.
Do you know much about their M&A and integration teams within Constellation Software? Can you talk about that, like the talent and where they source these people?
Yeah, so I would say it's a bit similar to what you have, let's say, for a Lifco is ideally if you have a network, as I mentioned, Constellation today is made up of 1,000 subsidiaries, so they do have a database of potential targets that they track. Of course, not all of these targets are, I would say, actionable. When you look at, for example, profitability, revenues, etc., and the price, of course. But they have a very wide database, continues to grow. I think it's 50,000 plus at least. And then you do have for larger acquisitions, because that's another thing to keep in mind is that if you look at Constellation, if you consider that they're doing so Constellation standalone, so excluding Topicus and Lumine, they do roughly 100, 120 acquisitions per annum today. So it's not easy to always, I would say, scale that number, which means that if you want to reinvest your capital back into VMS, that you have to acquire larger businesses. And of course, larger businesses are always or oftentimes offered by brokers. And that is something that's not been easy for Constellation because they're very focused on valuation and not overpaying. But over time, I mean, they've lowered the hurdle rate for these acquisitions to make sure that the brokers would then also contact, Constellation for in the bidding process as well. So I would say there is a lot of internal M&A sourcing and building a pipeline and a database and having a lot of contacts in VMS. But over time, because you're going after larger acquisitions, you have to be involved in the process of brokers as well.
Mark Leonard implemented a sophisticated incentive program early on at Constellation, and that's basically a large part of Constellation's success. Can you talk about the incentive program?
Yeah, so that's basically, again, also something that's been very well documented, and over time it's been replicated also by other companies, serial acquirers, but also non-serial acquirers. And it's basically based on return on invested capital, but also if you can reinvest a lot of cash back into the business, maybe at lower returns, then it's also still very favorable because, in the end, what you can do is invest a lot of capital back at, let's say, 20% return on invested capital, or maybe reinvesting a tiny portion of your capital at, let's say, a 35% return. So it's always about balancing the two. So making sure that you can reinvest a lot of cash back into the business, but also making sure that the returns are reasonable so that you can reinvest a lot of capital back into the business. So not just the highest possible returns, but also making sure that you can keep that reinvestment rate quite high. And so what they do at Constellation is, they have a bonus scheme that is based on return on invested capital. And that basically means that the cash bonus is then basically used to purchase Constellation stock on the open market. It's then held by Constellation for, let's say, 4 or 5 years. And then the employee can then decide if he or her wants to dispose some of these stocks that they've acquired over time. So that's a bit the incentive program, or I would say bonus scheme and compensation that they've tweaked at Constellation to keep everyone motivated to find good acquisitions, to not overpay, look for very good acquisition opportunities. But of course, I mean, over time, as you get bigger and bigger, it's not easy to maintain a very decentralized structure. And also, I mean, for the spin-out companies, let's assume that you're working at Lumine and that your growth and returns related to M&A are very good, even better than Constellation's. Then, of course, if you're getting a bonus that is based on the entire CSI returns, then it feels a bit disappointing, relatively speaking. Whereas if you would be a standalone entity, which of course Lumine is today, then it's much more attractive to then have a higher bonus because you are achieving better returns and better reinvestment rates. So it's definitely getting difficult over time as you become bigger to keep everything decentralized, but also to keep everyone happy, if you will, when it comes to compensation and making sure that you can retain talent. So that's been, I think, a bit more difficult, or is going to be a bit more difficult over time as Constellation continues to grow.